Hello, this is for the subject Church Financial Management. So this is a continuation of chapter 1. So we'll begin with the types of budget. So we have here an example of budget. Two things, capital expenditures and then the debt principal reduction budget. Okay. When we say capital expenditures, it's the acquisition of fixed assets. And when we say fixed assets, examples of these are building, land, vehicles, office equipment, furnitures and fixtures, any asset or property which would be usable for a number of years, more than 1 year, right? And these are also subject to depreciation. Instead of expensing the cost of buying them during the year they were acquired, the cost is allocated over the number of years that they would be used in the organization. Okay. And then for the debt principal reduction budget, essentially if the church has loans or borrowings, of course, they need to include in their budget the repayment, okay, or the reduction of that obligation. So they reduce the obligation, of course, by repaying, okay. They have to pay back the borrowings. Uh-huh. And then for the most part, this would depend on the agreement with the creditor, the one who lent the money to the organization. Okay, it would depend on the terms and conditions, the agreed amount of money to be paid. Let's say every month or every quarter or every year. Okay. Um, for small churches or for new churches still developing or still growing, then normally they try not to incur debts, or they try not to borrow money. But if they do, normally it's for building initiatives, or for major projects that they would need for their ministry. Okay. But there's a statement here: two significant elements of a church do not exactly constitute these two budgets. It's capital expenditures and then that principal reduction. Uh, the main part of the budget is actually the operating budget. Okay, operating, from the day-to-day, the budget used in the day-to-day operations of the church. Okay, let's say, what do you call it? Their budget for the compensation of the church workers, their budget for the Sunday school, the jeepney ministry, the food for the kids, and then the supplies for crafts, and then maybe some budget for the visitation every week, and then we also have the occasional fellowship, and then of course again the what do you call that, major events every year. So again, we have the family retreat, the BBS, church anniversary, Thanksgiving, Lord's Supper, and missions conference, youth whatever, youth fellowship, or things like that. Okay, so those are the normal or the usual activities of the church. So essentially, those comprise the operating budget. Okay, but let's say for GBC, aside from those, we also regularly give to missionaries. So we have the mission fund, and then we have ongoing construction of the buildings for the Bible school. So there's also the utilization of the building fund. But for the most part, you see here, normally the funds are already segregated or separated. You have the general fund for the usual operating activities, and then you have the building fund. It's separated, and then you have the vehicle fund. It's also separated. Although the vehicle fund is for the acquisition of new vehicles, and then the of course the fare during Sunday, jeepney payment for the jeepney, those are included in the general fund instead of the vehicle fund, since it's not exactly acquisition of vehicle. So, and then what else? There's also BBBC fund for the Bible school, also separated, right? And then what else? I think those are the main uh, separated funds. Okay. And then what we call operating surplus is that in the contributions from the members or from the guests, you do have tithes and offerings. Normally, tithes and offerings, those are the ones that go into the general fund or the operating fund. And then you have, of course, the building goes to the building fund, mission goes to the missions fund, vehicle goes to the vehicle fund, and then BBBC goes into the BBBC fund, right? And then any surplus contributions from tithes and offerings less the operating expenses. So you have the operating surplus, and this surplus can be used for other purposes as long as they are aligned with the church mission or purpose. Okay. So again, we have those three. The main is the operating fund. Second would be the capital expenditure budget, and then the third one is the debt principal reduction budget. Not all churches would have, debt or borrowings to be repaid, but some do. All right. Next, we have budgeting for auxiliary activities. So sometimes the church would conduct activities, but the budget for that are not included in the operating budget. For example, when we conduct, certain fellowship, instead of getting the budget from the general fund, for food, normally what we do is that we ask for the participants to contribute money for the food, right? When we conducted the youth, what's that? I forgot, the sports, uh, something. Whenever there's a fellowship for the youth, I think they ask for 30 pesos for the food or a certain amount. Okay, when we went to, what do you call that? When there was another fellowship somewhere, again, instead of getting the fund from the general fund, they asked the participants to contribute. Those who would like to participate, they would have to contribute for that particular activity. Okay, so in that sense, those are considered auxiliary activities. Instead of it being incorporated in the main budget, um, they do not include it in the main budget, and they simply create a separate budget for it. Okay, so for the most part, it's for those kinds of activities, fellowship, sudden outings, or sudden, uh, you know, activities. Okay. That's just an example, but there might be others. Okay. For example, how do you call that? Whenever there's a need, let's say if someone is sick or someone had an accident, the church would raise, money to provide subsidy or financial assistance for that purpose. So instead of taking it out of the general fund, they would ask the members, during a service or during the prayer meeting to uh, have another contribution or another offering for that particular purpose, right? Although, of course, the church would have a separate budget for when missionaries are asked to preach during service or during prayer meeting. So there is that. Okay. Uh-huh. In a way, the reason we do that is that it is a little difficult to anticipate how often those types of activities would be done. Normally, it's sometimes it's just a sudden decision, or um, there's suddenly no classes, uh, so instead the group would like to do an activity. So in a way, that's why it's not included in the main budget. In the main budget, you mainly include activities that are usually done, can be anticipated, and you can tell how often it would be done. Okay, so there's that. Budgeting for use of donor restricted funds. So you have contributions from the members, tithes and offerings. And then you have, of course, contributions as well from visitors or guests. But then there are instances wherein particular person sorry, would donate a large amount of money into a particular church. Okay, so there are two types of donations: the unrestricted and then the restricted. For the unrestricted, essentially the donor did not say anything. Okay, you can use this for whatever purpose the church would decide. Okay, you are free to use it for whatever purpose. Okay, as long as it's of course aligned with the church's purpose. And then the second one is the restricted. For restricted, sometimes the donor would make a specific statement. Let's say, I'm donating this for the Bible school. Okay, for let's say the tuition of some of the students who need financial support, or they would say, I'm donating this money to help out in the building of, new classrooms. So in that case, the fund or the donated money should be used for the particular purpose the donor stated. Okay. So essentially, again, we have the main budget or the operating budget, and then um, when we create the budget of the church, normally we only consider the expected contributions from the members and the visitors. Normally we don't include the sudden donations from some people or from certain organizations, because we do not know if it would come or not. Okay, at least on the part of the contributions from members, we can project how much they will be able to contribute in the coming year. But for donations, we do not know. Okay, so we don't include them in the budget. So um, when a donation is made, normally we put it separately from the general fund of the church. Okay, and then there's an example here of a situation wherein a donation was given for the youth ministry, and then the church decided to use it for conduct of activity for the youth ministry. But then they suddenly wanted to you know use it for the building, okay, for the use of the youth, only to find out that the fund or the donation was already utilized. Okay, so here's a question: is it ethical to use donor restricted funds to replace regularly budgeted expenses? What do you call this? Practical wise, in terms of practicality and convenience and consistency, it's best not to. Okay, don't incorporate it into the regular budget. Okay, don't incorporate it in the operating budget. Don't try to replace the anticipated contributions with a donation. Okay, when you receive donation, it's best to separate it from the regular budget of the church. Okay, for the most part, again, we do not know how often donations would be made and how much donation would be made in a particular year. Some year there's no donation, other years there's a small amount of donation, other years there's a large amount of donation. So we can't tell for sure. So we can't just, rely on something that is unreliable. Okay, we don't know if it's going to come or not. Okay, so let's not put it in the regular budget. Okay, if it comes, then that's good, and let's use it for the purpose. If it's donor restricted, so whatever the donor said, okay, where to use it, so let's use it for that. Okay. There's also another question here, with regards to who should decide for what purpose to use the donation. Okay. Again, this is a matter of communication between the donor and then the decision makers of the church, and then between the decision makers of the church and the congregation or the members of the church. Okay, especially if the donation was what do you call that, communicated to the members. So in a way, the members would be like, oh, so where there's a donation, where is it going to be utilized? Okay, so it's best if the management of the church, the managers or those who make the decisions, should, transparency, properly communicate where the money is going. Okay, before it's used, let's say, okay, so we're going to use the donation we previously received to help out, let's say, some of our BBC students. So at least, it's properly communicated and the people knew where the money is going. Okay, you don't want to create a misunderstanding. You don't want people to think that someone pocketed the money. Okay, that's never good for a church management, right? So there is that, and then budgeting for use of donor restricted funds as a control mechanism. Um, Again, since we're going to separate donations from the regular budget of the church, um, the control mechanism there would be to use the donor restricted funds for their specific purpose. Okay, and then of course your limit there would be the amount of donation. You can only apply it to certain projects that would need that much amount of money. Okay, or use it to support a project which would need uh, that much amount of money. Okay. Essentially, the budget is used as an expense control mechanism in such that in the budget you project how much contributions would be made, okay, how much money is going to come in during a particular year. So you can only um, what do you call that? You can only allocate this much of money into, the different ministries or different activities. This is your limit. Let's say the church projected that a total of 1 million would be contributed by everyone during the year. Okay, so only 1 million would be allocated to the different activities. Okay, when you allocate budget to the different activities, the total should not go over your projected cash inflow. Okay? If this is 1 million, the cash outflow should not be more than 1 million. Okay? Because you only have 1 million. It's difficult to spend uh, money that you don't have. Okay? So you have cash inflow 1 million. How do you expect to spend 1.2 million when you only have 1 million, right? It's simple common sense. And then there's this question: what are we going to do if we go over the budget? What do you call this? For the most part, we would like to ensure that we're not going over the budget, right? But in certain cases that we do, in a way, it doesn't happen often. Let's say normally this happens during, construction. Suddenly the cost of materials have risen. Let's say the amount of compensation was increased. So sometimes these are not expected. Okay, the management failed to anticipate, because sometimes we really don't know when the regulatory bodies would change their policies. For example, minimum wage. There are instances wherein, although of course it would go through a consultation, but the actual approval or implementation would be somewhat sudden. Okay, so it's possible during the year, in the middle of the year, the regional tripartite board would increase the minimum wage. So you have, what do you call that, you have no choice but to increase the compensation of the workers, because you have to follow the minimum wage. So you did not include that in the budget, but since you have to, because it's required by the law. So it's possible that you might go over the budget, because it's something that you were unable to anticipate. So in that case, maybe there are at least two things you can do. First one would be to borrow money so that you can compensate. You can offset for the over budget, or the second one would be to raise additional contributions from the members. Okay. But other than these two, there are also, other ways that the church can raise the money needed for, the over budget, right? Okay, but again, if it's something that is within the control of the church, then as much as possible, it's better to simply, crunch the numbers to lower the cost if possible, or if you can do away with a certain expense, then go ahead, so that the budget would be, enough for the expenses. Okay, as much as possible, no over budgeting would occur. Okay, and then on page 16, you have the sample church budget policy, budget methods and approvals. When are you going to prepare the budget? Who would prepare the budget? Who would review it? Who would approve? Or who would you need to discuss the contents with? And then for the inclusions of, the activities or items, who would you need to, what do you call that, interview or ask? How much money would be needed for those particular items? So information gathering. Okay, who would do it and who would be responsible for the amounts that would appear in the budget? So that should be included in the policy. Okay, and then limitations. Um, what are the limits? Okay, and then who should set the limits, and then who should approve the limits? Okay, for the most part, it would be the finance committee or finance department who uh, understands how the whole process works. So for the most part, they do have a say in the whole process. Okay. Variances. What we call variances is, the difference between the budgeted and the actual. Okay, for example, you budgeted 50,000 for the missions support to missionaries, and then at the end of the year, you see that, oh, you only sent 30,000 to the missionary. So there's a difference or variance amounting to 20,000. So you have to, justify or call out the attention of whoever's responsible for it. You'd have to ask, why did we send only 30,000? Okay. Why don't we send out the rest to the other missionaries or something like that? Okay. whatever variances there is, it has to be properly explained, if not justified. Okay, you have to explain why did it happen, why is there a variance, and then if you can properly explain it, then that's good. Justification normally is needed when there is an over budget. You went beyond the budget, and normally uh, before you incur over budgets, it would go through a process pa din, because before it is approved for disbursement or payment, it would need an approval from the management or the board of directors. Okay. In terms of management, churches or nonprofit organizations, so the what do you call that? The management is normally called board of trustees. Okay, for for-profit businesses, organizations, it's called board of directors. Okay, but for non-profit, it's board of trustees. Okay, and then the board of trustees, board of directors, composition. Of course, you have the chairman or president. You have the vice chairman. You have the treasurer, you have the secretary, you have the auditor, and then I think those five, president, vice, secretary, treasurer, auditor, those five are the essential positions within the board of trustees or board of directors. Okay. Additional officers or members would depend on the articles of bylaws or the articles of incorporation of the organization. Okay, it would be indicated in the bylaws how many people would comprise the board. Okay, and then normally included in the bylaws as well, what kind of decisions are delegated to the board. Okay, what kind of decisions can they make for the in behalf of the members of the organization. Okay, and then there would also be what they call it, statements on which types of decisions would require the approval of the congregation. Okay, that's why we have business meetings, voting on certain decisions for the church. Okay, so it's best if those would be written as policies, okay, so that there's no question on who should be responsible for which duties or responsibilities. Okay, and then included as well budget methods and approvals, capital expenditures, debt principal reduction. Okay, question is how much should we set aside for capital expenditures? What should we acquire this year? Should we buy a new vehicle, or should we focus on building classrooms, or should we buy additional computers or whatever equipment? Okay, so there's a decision that has to be made, and there's an approval. Okay, debt principal reduction. How much of our loans should we pay off? Okay, that's a question. Can we pay half a million, a million, or 2 million? How much can we uh, pay for this year? Okay, so again, it's going to be included. Budget methods and approvals for auxiliary activities. Although this is outside the regular budget, but of course, the expenses, the money that would be collected for auxiliary services, auxiliary activities, they should be accounted properly as well. They have to ensure that the money were actually used for the purpose of providing the food during the activities. If there's any excess, they were added to the fund of the group. Let's say career. I think the careers do have their own activity fund, or for the youth, or whichever group. Okay. We also have disbursement and use of restricted funds. For the disbursement, of course, there's a process. These are properly documented before the money is spent on something. There should be a request, properly indicated for what purpose the payment is going to be, uh, for what purpose, to whom it would be paid, the amount, and of course it would be checked against the budget if it's been included in the budget before the final disbursement. Okay, and then for the disbursements, it's either in the form of cash or check, right? And then for the use of restricted funds, it would be the same, uh, properly documented, and sometimes you would have to inform the donor so that they are properly informed that their donations are being used already. Okay. Alternatives to the annual budget. Since the budget is again not a required report, it's only internal. So the organization does have a leeway or discretion in how they're going to prepare their own budget. There are different styles, but for the most part, the main principle is that you have to compare the cash inflow and then the cash outflow, right? Um, I think later we would have a different discussion for the budget, the preparation of the budget. Probably an activity that you would have to do is you're going to prepare a budget for your missions or for your church. Identifying expense reductions. What are these? Reducing expenses. Oh, okay. So again, your expenses or your expenditures would be limited by your projected cash inflows or contributions from the members. In case your projected expenses is more than the cash inflow, then one of the things that you can do is to reduce expenses. Okay, you have to check again your expenses and then determine which ones can what do you call that, can accommodate reduction in expenses. So for example, what do you call it, I think during holiday break, December, Christmas break, this the most recent one. I think we did away with the gifts for the kids. Okay, but of course, I think someone donated so that they still received some sort of gifts. But essentially, uh, with regards to the budget of the church itself, it's not included, or there is a budget for it, but it's not as much as the previous year's budget for the same activity. Okay, so because of the pandemic, the contributions have been affected as well. So the expenses would have to be adjusted as well. Okay, so if any of these activities can be, in a way, reduced, the budget can be reduced, then we have to. We have to. And then the next one, the no noticeable impact phenomenon. Okay. Um, I think the main point here is in terms of comfort. Comfort. Um, for the most part, we can actually reduce the expenses as much as we can. But you know, normally if the circumstances force us to, for example, during the pandemic, beginning of the pandemic, there were significant decline in the contributions and the offerings, but the churches were able to adjust their spending, and there's a question of if they were able to do that during such a time, why is it that in the previous years they did not do that? Okay, so I think again, convenience and comfort. If we can provide a service uh, you know, providing the needs of the students or the visitors, then why not? Okay, then why not? If you can, give the proper compensation to the workers, then why not? Okay. But during difficult times, of course, everyone can make little sacrifices, and they would probably be fine with the reduction in these expenses. Maybe their compensation would be reduced. Maybe the budget for food would be reduced. The amount of food to be served would be reduced. Or in during some activities, um, there would be no more food. Okay, just to save money or just to save funds. So there are those things. Anyway, so there is that, and then obvious places to look. Some of the things that can be eliminated. A note about eliminating staff positions or terminating employees. In a way, this is a bit tricky because, you know, labor laws. Although, of course, it would be easier for churches to do because, simple communication between the church and the worker, proper explanation on why we're going to eliminate staff positions or why we're going to terminate employees. And of course, it has to follow the proper procedures. So the employee would have to voluntarily resign from the post because, again, there are repercussions if it's, what do you call that? If it looks like the employer terminated the employee unjustly. So there are repercussions, and we don't want to go through that. Okay, in a way, it's legal matters. Um, would end up with penalties, probably a case, civil case or something. So we would rather not go through that. Okay. Five not so obvious places to look. These are to reduce expenses. So first one, mission and purpose exercise. Again, whenever you're trying to create a budget, you have to ask, is this necessary? Is this going to support the achievement of the mission and the purpose? If it's not, eliminate it. Okay, don't go ahead with that. Okay, second one will be streamlining processes and systems, efficiency and effectiveness of the systems. Okay, have to check whether something is working. Are something like, are we really going to be able to save up on this, or would eliminating it would only cost us more in the long term? Okay, it's possible that in the short term you would be able to save, but in the long run we might be spending more. Okay, so you have to make sure that any reduction would contribute to an efficient and effective process or system. And then there are guide questions here, so you can just go through them. Uh-huh. Example here, scanners, not on desk. Okay, with the advent of technology, of course, we now have mobile applications to scan documents, so we would not need scanners anymore. Okay, bulky scanners, costly scanners, just use the app. Okay, and then okay, so I'd like to add, although unrelated to the topic, it's good if the management of the church would be composed by people from the different generations, so that they would complement one another. For example, you have your older generation; they would have more experience to share, and they would have already seen a lot of things that might occur in the operation of the church. And then you have your younger generation who are more aware of the advances in technology that might uh, be utilized by the church to save up on certain costs. Okay, so one advantage of having the mixed generation in a management team. Okay. Next, thirdly, you have energy studies and adaptations. Um, this is more scientific, but okay. Adaptations to equipment, fixtures, insulation, in a way, fixed assets. Okay. Energy saving, what do you call that? Mechanisms. Okay. Things like that. I think at one point the church considered whether having solar electricity would be, more cost efficient compared to the traditional source of electricity. So there are things like that. Outsourcing, what do you call that? For example, security. I'm not sure if I think the church is still outsourcing at least one security guard, but for the most part, the rest of security responsibilities were given to the men of the church. Okay, so if it's going to help the church to save up on certain costs by outsourcing them, then go ahead. But if it's not, then go the traditional way. And the next one is collaboration. Instead of putting up a new project or initiative on your own, you can consider partnering with a different organization or a different church, okay? So that you won't be forking out all of the money, right? And then the last part is 12 steps for sound church budgeting. I haven't actually read this, but okay, first is identify or evaluate the church's mission and purpose, number one. Secondly, identify, evaluate, and critically screen the programs, activities, and initiatives that significantly assist the church in carrying out the mission and purpose. Okay. After that, for each program, activity, and initiative the church plans or wishes to conduct, you have to determine and define the attributes of excellence. How are you going to do this the right way or the proper way? Okay. Don't do it, half-heartedly or in a lousy manner, right? You still have to strive for excellence. Number four, identify or define the church's spending philosophy, the priority of the church during a given period. Okay, polished and refined, nice and adequate, modest and thrifty. Next, number five, identify or define the church's compensation philosophy. So you have the either well above average, average, modest, or vow of poverty. Number six, identify the church's targets for sound liquidity and financial position and the time frame for reaching them, with annual milestones, interim targets. Seven, determine the capital expenditures and principal reduction requirements for the relevant period. And then number eight, identify and determine the cost for carrying out the programs, activities, and initiatives in an excellent manner as identified in step 3, applying the church's spending philosophy and compensation philosophy. Aggregate cost with capital expenditures and principal reduction requirements identified in step 7. Essentially, this number 8 is the operating budget. Okay. Number 9, estimate the resource or funds expected to be available for the applicable period. Okay, and then you have to compare this with the total of these expenditures. Okay. Assess the estimated revenues as compared with the total cost. Okay, and then the desired progress toward liquidity and financial position targets identified in step 6. And then number 11, prioritization decisions is necessary to reduce specifically identified costs so that resulting estimated excess of revenues over cost is satisfactory. Have to make sure that the expenses would not go over the expected revenues or funds. Okay, and then last, pursue approval of operating capital expenditures and debt reduction budgets In accordance with church policy, identify specific sources of funds for capital expenditures and debt reduction budgets. Okay, so this is essentially, the whole of chapter 1 that we've discussed individually. All right, so you have your 12 steps in the budgeting process. All right, so that's it for chapter 1. Next will be chapter 2 about accounting itself. All right, thanks and bye.